to the presentation of the results of the first 3 quarters of 2024 of Palfinger AG. My name is Felix Strohbichler. I am the CFO of Palfinger. First of all, let me give you some basic information about Palfinger. Palfinger is the global market leader for crane and lifting solutions. Our revenue was close to 2.5 billion in 2023. We are present in all regions worldwide with 31 production sites, so we are really close to our customers with all our setup worldwide. And what is very important for our customers, we are present very close to our customers with 5,000 service centers around the globe. We employ around 12,500 employees, and at the bottom of this slide, you can see the revenue distribution for the first 3 quarters per region. So around 58% coming from EMEA, 27% from North America, actually growing towards 30%. Our target is to reach 1/3 of our revenue within the next 5 years, and 5% coming out of the other regions, Latam, APAC, and CIS. On this slide, you can see our offerings. So we have a very comprehensive product portfolio ranging from products offered on trucks and railcar solutions like loader cranes, timber recycling cranes, tail lifts, access platforms, hook lifts, and truck-mounted forklifts. On the other hand, we also offer plenty of marine solutions like marine cranes, David system with rescue boats, offshore cranes, winches, so a lot of different applications. And what those solutions have in common are digital solutions we are also providing to our customers. We are very resilient through a high diversity of our customer segments. Around 40% of our customer base is coming from the construction industry, more than 10% from forestry, around 10% from waste management and recycling. And then we also supply to customers from transport and logistics, the public sector, rental companies. Offshore oil and gas is quite important, especially in the marine segment, railway, offshore wind, aquaculture, fishing, passenger cruise. So a broad variety. And as you can also see, sustainable customer segments like offshore wind, recycling, railway are also an important part of our customer portfolio. Sustainability is a very important part of our strategy and of our operational business. What I would like to highlight here is that in the end, in 2024, we have managed to improve all of our ESG KPIs, also mentioned here on this slide. Just to talk a little bit about the markets, in North America, we have seen now years of very steady growth. At the moment, due to the upcoming election, there is some slowdown. However, we do expect that after the election, whatever will be the outcome, we will see again a recovery of the demand and of the market. In APAC, also the market situation is quite positive, especially in India, which is our most important growth market in terms of relative growth. In China, however, there is no recovery visible at the moment. Marine has been growing substantially on the one hand in revenue, but what is even more important, especially profitability, has gone up significantly in the marine sector in 2024. In EMEA, however, in our core markets, especially in Germany, but also Scandinavia, these remain at a low level. Latam, Brazil, Argentina are also on course for growth. So it's a mixed bag in the markets. Not everything is bad, but of course, EMEA, our core markets at the moment, are still in a difficult situation. On this slide, you can see our financial KPIs for the P&L. So revenue has decreased by around 3% to 1.745 billion. EBIT has been reduced now to 158.7 million, coming from 165 million in the last year. And EBIT margin is more or less on the same level with 9.1%. So if you look at those results, you could consider that not a lot of things have changed. However, in reality, in EMEA, we have seen a substantial decrease of activity and also of profit, and this could be almost fully compensated by substantially increased earnings in North America, in marine, and also coming from the restructuring in tail lift. So in the end, you can see in the 2024 results that the strategy of Palfinger to diversify and to be international has very much paid off. Here you can see the order book development. So even if the order book, due to the economic situation, especially in Europe, has come down by 27% compared to last year, we still have a very healthy order book of almost 1 billion euros in our hand. What you can also see here is the share of our service business, which has increased from 15.5% last year to 17.4% in 2024 in the first 3 quarters. And here we see clearly a potential to grow this to more than 20% in the next years to come. Looking at the balance sheet, it's very solid. Our equity at 750 million, almost an equity ratio of 35%, underline a very high stability of Palfinger. Gearing with around 100% is not where we want to be, but we have a lot of potential to bring down working capital, which will help us to improve here the gearing and also net debt EBITDA. This leads me to our free cash flow development for 2024. You can see still a negative free cash flow of -2 million. However, already in the third quarter, we had a significant improvement of around 20 million. And last year, at the same point in time, we were showing -28 million. We ended up with 46.5 million positive free cash flow at the year end 2023. So we do expect a similar development also in 2024. So a clearly positive free cash flow going above 60 million is our target until year end, mainly coming from optimizing the working capital where we have a lot of potentials. Let me now come to the outlook for 2024. We expect the second best year in history, despite of a challenging market environment, especially in Europe. We still expect that the marine sector, APAC and Latam, will continue to perform. In North America, at the moment, we have some lower activity level, but this will come back, we hope, in the next year. What will also impact the results in Q4 is that we have already started to adjust capacities in the last quarters. There will be another impact in Q4. And of course, this will also have some impact on our results. So we do expect around 5% of decline in revenue compared to the record year 2023. And the EBIT will be more than 10% below the record year 2023. Clearly, our focus is on free cash flow by reducing our working capital. We have set ambitious financial goals for 2027. We want to remain the number one in our market with a revenue of 3 billion coming from organic growth in 2027 at a 10% EBIT margin and 12% ROCE. There is a clear plan behind. However, we also have to say that the revenue target is becoming increasingly challenging due to the difficult market conditions. Thank you for your attention.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.